Good morning, traders, and welcome to the live stream. My name is Charles Gough. I come from a community called Pirate Traders, where we are focused on the ES and NQ and how they move through the two-way auction process. This morning, we are going to take a look at the ES and try to figure out where's it going this week and what's going to happen next. So, if you have any questions, please let me know in the comment section. If you are watching this from the Bookmap Discord, just head to the Futures-Charles tab in the Discord, and you can ask your questions there, and I will get to them as best I can. All right, let's dive right in. So I always like to start my analysis at the beginning of the week doing what Jim Dalton calls the top-down approach. What is the top-down approach? Essentially, it just means that you start with a much higher time frame and work your way down to a smaller and smaller time frame. A lot of times you can understand the context of a smaller time frame if you first understand the context on a longer time frame. Okay, so that's what we're going to do this morning. I need some coffee. That burned my mouth. Okay, so what are we looking at here when we look at the monthly chart? Well, everything looks bullish, right? Big wick on the lows down here, straight momentum up from there. No reason in the world why the market can't keep moving higher this month. But there is one thing that jumps out at me about the monthly that is worth mentioning, and that is these previous all-time highs. So on a monthly time frame, when you start to break old all-time highs, you almost always come back and retest them. Now, it doesn't have to be right away, so I'm not saying we have to come back this month to test those previous all-time highs, but I'm just saying that it does happen, with a very high probability. So that would be the market coming back to like 6160, okay? So right now, we don't need to worry about it. But if the market starts to dip, if it starts to pull back, we want to keep that in mind, that we have not come back to retest those. If we just zoom out a little bit, you can see here's an example of we had all-time highs. Sure, we got that big monthly candle to the upside. We opened the next month and pushed higher. That's a repeat of what we have right now. But then what did the market do? It came back down to test those previous all-time highs again. Once it found support, then it was able to make the move higher. Okay. Coincidentally, those new all-time highs that it made right there, it didn't come back for like almost 2 years. Okay. But it did come back to retest them. So that's what I need you to understand is it's a very, very, very high probability when you make, when you break through all-time highs on a monthly time frame, at some point, the monthly chart needs to come back and test them. Here's another example of it. Broke through those all-time highs on this month. The next month came back in, tested those all-time highs, found support, kept going. Here's another example. Made new all-time highs. Took 2 months for it to come back, but it came back to test those all-time highs again. Okay, so when the market breaks through all-time highs on a monthly time frame, it is a very high probability at some point it's going to come back to test those previous all-time highs. Again, that doesn't have to be this month. It might be 2 years from now. I'm just saying it is something to keep in mind. Otherwise, it's bullish. Next, let's zoom in and take a look at the weekly time frame. So on the weekly time frame, we can see that the market spent a while balancing. We can see that balance in here in the form of this triangle that you see right here. We have broken out of that balance. We have already gotten more than enough excess to the upside, as a breakout of the balance. So again, the weekly chart is telling me that this market is probably going to run out of steam to the upside here. We've made a big move very fast, and it probably needs to run out of steam. It doesn't have to. And if we can stay this week above last week's lows, there's no reason on earth this market can't keep going for weeks and weeks ahead. But if we break last week's lows, it means we need that larger pullback with price. Okay, so that's going to be 62.18. So again, 62.18 breaks, we need to come back down to 61.60. Okay, that is the next thing in my mind. Again, right now it's bullish, and there's no reason to assume it can't just keep going to the upside, but I'm aware of these levels. Okay. Next up, we have the daily time frame. Now we have even more detail and even more information. We can see that throughout the month of June, the market was stuck inside this channel. Okay, and it was just bouncing around inside this channel trying to break. Well, it finally did that. It finally broke out of that channel at the end of last month. Since we broke out of that channel, we have been turning that previous resistance into support, which again is just very, very bullish. As long as we continue to hold the support on that trend line, we should expect the market will continue higher. So we talked about if we make a new weekly low, we're expecting that larger pullback, but above that level is going to be this trend line. If this trend line on the daily can hold, there's no reason the market can't continue higher. If this trend line on the daily breaks, that might be the sign. The market needs that larger pullback in price. Okay? Now we're going to zoom in and take a look at the market profile software for even more detailed information about what was happening the last few days of last week. So in case anyone is confused by what I'm talking about, if I say yesterday's range today, I am referring to Thursday. It's just how I talk. It's just the terminology that I use. The last day I was trading is always yesterday. So that was Thursday. So Thursday's range to me is yesterday's range. Everything that happened between Thursday and this morning is what I call the overnight. So if I say the overnight this, the overnight that, I'm talking about the entire weekend combined together as one thing. Okay. So thinking about it that way, this was Thursday's range right here. What jumps out to us about Thursday's range? One, we had a gap up. Okay. We had a gap and go. Market found support above the overnight high and kept going. We had a P-shaped profile, which is a sign of momentum. It is a sign of less momentum than an elongated profile. It's a sign the momentum is slowing down, but it is a sign we still have momentum up. All of that is bullish. Okay. Every single thing in the information as of the market close on Thursday was bullish. Okay. All of it was saying the market would continue higher. Over the weekend, the market came back down, and where did it find support? You guessed it, folks, exactly to a tick. It found support at the gap fill. This, to me, does not count as a gap fill. We have to fill the gap created in the regular trading hours on Thursday at some point during the regular trading hours. Otherwise, that gap still exists, and it's still a magnet for price. You add the fact that the overnight reversed exactly at that level, and what does that make that? A week low. So now you've got a gap and a week low. You've got a very, very strong magnet pulling on price to come back down to 62.76. So again, this feels the same to me, talking about just what happened over the weekend as we were talking about when we were looking at the daily chart and the weekly chart and the monthly chart. Every single thing is saying the market is still bullish and it's going to keep going higher. But we are building up a lot of reasons for the market to dip and come back down. So how do we think about that as traders, as intraday traders? As long as the market still has the momentum, we should assume it's going to keep going up. As long as it keeps showing us signs that it's going to keep going up, we should just assume it's going to keep going up. We should trade accordingly. We should not be trying to guess when the market is going to run out of steam and start randomly shorting all-time highs. Because as long as we keep shorting all-time highs, the market's going to keep making new all-time highs. Just because squeezing those shorts will keep the market going higher and higher. And I would say the second half of last week, Wednesday and Thursday, that's what it was. It wasn't really momentum to the upside as much as just squeezing the sellers because people kept shorting and getting squeezed and shorting and getting squeezed. So don't play that game today. Don't start shorting before the market tells you that it's ready to go down, before the market gives you the signal that it has run out of steam to the upside. So what are those signals going to look like? Let me walk you through how we're going to look at the market this morning to give us a sign of what to expect, going forward. So from yesterday's low, which is 62.93, to this overnight high, we'll call it the base of the single prints from Thursday as well. So we'll say from 62.93 to 63.16. Okay, mark those levels. 62.93 to 63.16. This is a chop zone. This is an area where the market is likely to go up and reverse and come down and reverse and look like it's going to break lower and then reverse and look like it's going to go higher and reverse and just keep chopping and squeezing and chopping and squeezing and chopping and squeezing traders on both sides. It'll get up towards the upper end of the range and it'll look like it's going to the moon and everyone will get long up there and then whoosh, it'll come back down. It'll look like it's going to break lower. Oh my God, the world's coming to an end, and whoosh, it'll come right back up. Okay. As long as we are inside that zone, we should assume we're going to just go sideways and we don't really have an edge in predicting which way it's going to break out of that zone. But when we get to that chop zone high or that chop zone low, what happens next is very valuable information. If the market gets up to the chop zone high, it gets up to 63.16 and it gets above there and it starts to bring in new buyers and it starts to turn that into support, that is extremely bullish. Okay, it increases the odds that first we're going to head up and test 63.23, and then with new buying there, head up to test the all-time high. You could make it as simple as saying new buying above 63.16 increases the odds we're going to make a new all-time high, getting above 63.33. Okay, however, if it cannot bring in those buyers, so if the market works its way up there and it flips and comes back down, that is short term, a sign that we need more balance. We need more chop. We need to go sideways some more, but also bigger picture. If we get a look above and fail of 63.16 today, it is a sign that the market is creating resistance. It is a sign that we need that larger pullback. Now, it's not a guarantee. We're still in the chop zone, but it's a piece of information we want to be aware of and carry forward, because that information could be a great edge for a short. What's the next thing we'd be watching? Well, what happens at the lows? So let's say the market comes down to the low from Thursday, 62.93 today. Same thing. If it pokes below there and it gets resistance and it gets new selling, we're looking to fill the gap to 62.76. That is an extremely high probability today. If we get below Thursday's low, it is a very high probability we will fill the gap, okay? Because there will be longs that will get squeezed, right? People that were buying up here last week are going to suddenly give up on those trades. That's going to cause momentum down, and you're going to have shorts that start to enter the market purely to fill the gap, okay? So when you combined all of that together, new selling below 93 is extremely high probability to test 76. Okay. So that's just the next thing to think about intraday. From there, either the market finds support, turns around and we start the party once again, or we start doing what we call monitoring for continuation lower, which is saying how far down does the market need to go? Does it just need to fill the gap and then we find support? If not, we need to test the first week reference. If that's not enough to flip the market, the second and the third and so on and so forth until the market finds support. At that point, we're watching that trend line on the daily that we were talking about as well, right? What happens as we poke into that? And then the last scenario that could happen would be the market pushing below yesterday's low, but not getting that new selling and reversing back up. Okay. Just like the reversal at the chop zone high would be a sign that we may be getting a larger pullback with price. A reversal at yesterday's low, where it just pokes below and then fails and pulls back up, is extremely bullish and increases the odds we're going to the all-time high. Okay? So there's nothing wrong today with just take a chill pill, Bill. Just relax. Let them chop it up. Let them grind it around. Let them play their fucking games. Let them try to get above and then maybe find support or fail. Let them try to get below and maybe find resistance or fail, right? And you wait until you have confidence, because either way, whichever happens, whether we get above the high and find support or not, or get below the low and find resistance or not, the outcomes are pretty much laid out like clockwork, okay, as I just did for you. So that's where the high probability trades come. The high probability trades either shorting a failure at the high or longing support at the high, targeting the all-time high. or shorting resistance at the low, or longing a look below and fail at the low. Okay? Either one of those gives you the big slingshot move that has excellent risk to reward. All you have to do is sit through the chop. All you have to do is not force your way into trades, not lose money first thing in the day and burn up all your dry powder so that you got nothing left when the great opportunity presents itself. Now, we may get to the chop zone high or the chop zone low in the first 5 minutes of the day, and it may happen in a minute. We may spend 2 hours chopping around inside the range before we test one another. We may get to that chop zone high and that chop zone low. We may grind there forever. We may grind there for hours before it breaks away. All of that is fine. That's just the market doing whatever the market wants to do. The opportunity is in the patience and the ability to execute at the moment when we are either finding support above or not, or finding resistance below or not. Any questions on any of that from the chat? Any questions from the chat? Good morning to Arjit. Thomas E. says, good morning. I'm excited. It's my first time. Well, Thomas, I hope you enjoyed it. I hope that made sense. If anything is confusing to you that I say today, please ask questions. You're not the only one who's here for the first time. So if anything doesn't make sense, just ask me questions and I'll explain it. And other people will probably appreciate that you asked. Good morning to Crypto Writer and Mark. Crypto Writer says, is it possible for you to analyze one of your wins and lost trades in the last period? Your technical analysis is great, but it would help to understand execution, entry, drawdown, handling stops and take profits. I go through all of that in my workshop. So I teach my setups and how I trade them in the workshop. I don't do them live in front of you guys because it messes me up. As far as covering trades that I've taken in the past, I will tomorrow in the Brigade live stream talk about whatever trades I took today. But I just told you what those trades are. These are the trades I'm going to take today. If the market gets above the overnight high and it's finding support up there, I'm going to pick a level that I think should hold as support. It'll probably be 63.12, but we'll have to wait and see what it looks like when we get there. I'm going to put my stop below there. I'm going to get in at market somewhere, wherever I feel confident that the market has support. I'm going to enter my trade. I'm going to put my stop down there, and I'm going to put my take profit at the all-time high. Doesn't mean the market can't keep going way past the all-time high. It just means that's the target where I feel confident I can take in profits. Okay? If the market comes back down and it stops me out, I'm going to do nothing until we get to the chop zone low. Okay? Now, if we get to that chop zone high and I don't think we're finding support, I don't think the market's going to keep going higher, I'm going to go short. Same thing. At market, whenever I feel confident that the market is not going to keep going higher, I'm going to get short. I will put my stop above whatever is the high at that moment, and my target is probably going to just be the center of the range, but again, we'll see. If I'm feeling good about it, my target would be the gap fill all the way down here. Now, why do I say my target would be the center of the range if I think we could get all the way to the gap fill? Because I could lock in profits on the first short right there, and then I could enter another short at resistance to fill the gap. So no, I wouldn't catch the whole move, but both of my trades would have a much higher probability of working. And so that is always my goal. My goal is always to balance in my mind my targets as, is it going to be, the most reward I could possibly get, or is it going to be the place where I know for sure I'll be able to lock in profits? I want to try to get somewhere in the middle of those two, right? I want to push trades as far as I can, but I also want to guarantee I'm going to lock in profits and not have it completely reverse on me. So that's the way I would think about a short up there. And then same thing at the previous day's low. So if the market got resistance down there, I would get short at market wherever I felt confident. I'm like, at this moment, I think we're going to go lower. I would get short. Again, I would find a resistance level above to put my stop. It'll probably be 62.96, but we'll have to wait and see because these things change minute by minute. So that was support in the overnight, which means it's likely to become resistance if we're going to sell off today. But who knows? We'll see what the market does, and that's where I'll figure out where that resistance level is. My stop would be above there, and my take profit would be the gap fill at 62.76. If that trade didn't work and it stopped me out, again, I would do nothing until we got back up towards that chop zone high. Okay? If I felt like the market was going to look below and fail, if I felt like there was no resistance, same thing as at the high, I'd go long wherever I felt confident. I'd put my stop below whatever is the low of the day at that point, and my target would be the center of the range. Okay. Actually, honestly, with the look below and fail today, I would probably target a move back up to the overnight high, back up towards 63.16. So that's how I do it. And I know what to look for in the market ahead of time. Right? I know not to worry about what trade I'm going to take here or here right now. I know to just watch, because if I start planning my trade ahead of time, planning by which I mean deciding what I'm going to do, then I'm going to get confirmation bias and I'm going to misread the information. So I want to be truly open to any of these four scenarios happening until in real time at that moment, the chart is telling me which of those is happening. Then I want to take action instantly, right? That's what it's all about. It's about the patience to wait and wait and wait until I believe I have a very high probability opportunity with good risk to reward, right? So think about these different trades. If I'm going long to the all-time high, it's probably that kind of risk for that reward. If I'm going short, it's probably that kind of risk for that reward, right? These are good risk reward setups where I'm going to win more than I'm going to lose, and vice versa at the low. So all I have to do is be open to anything so that I have clear judgment to read the information when we get there. Then I'll know which of these trades to get in, and same thing at the low. Okay. So I'll let you know tomorrow which of these trades I took today. And honestly, I will also let you know while I'm trading. I just won't outright say I'm going long right this minute, but I will say we're above the overnight high. We're finding support. This is bullish. We are likely to test the overnight. Like I will spit out the information telling you what's going on in that moment. But if you want to learn all of this in detail, I really recommend next time I teach a workshop, you check it out, because I cover all of this, all my setups that I trade, how I find them, how I define them, how I manage my risk so that I can never blow up my account, no matter how bad of a drawdown I have. All of that is covered in the workshops. And it's just too much to teach live like this. We'd be here all day. We'd be here for 2 weeks because that's how long the workshop is. Good morning to Abstract Grooves. Wow, 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 Abstract Grooves. Tom in the house, good morning to you. Rich is here. Griff, welcome. DNK says, looking at the daily profile as a break of the channel at the high, but if we look at it, the real change was the look below and fail of the channel. The daily profile. I'm not sure what you're referring to. Can you point out some levels so I know exactly what you're talking about? Laura in the house. Welcome, welcome. Lino says, which charts? So the chart on the left is a market profile chart. The chart on the right is a bookmap chart, order flow. So the market profile chart helps me understand the structure of the market. So who is doing business where and what is happening. So for example, the structure of Friday told us we had a lot of buying, FOMO buying, chasing price up. The structure since the end, Thursday, since the end of the day on Thursday and in the overnight is showing us that momentum is running out of steam. Okay. So this morning, that chop zone will give us the final clue. Do we still have momentum and we keep going up, or do we need a pullback? That's context. Then what I do is while the market is trading, once that opening bell rings, I watch the order flow to look for changes in the market, right? If the order flow looks a certain way and suddenly something changes, let's say a bunch of liquidity appears or disappears, or it moves from one level to another, that's an indication of a change in the market. So for example, if, and I'm not predicting what's going to happen, I'm just saying as a scenario, let's say there's liquidity above price and the market starts to work its way higher. And as the market is pushing higher, they're moving that liquidity higher, right? And the market starts pushing higher and they're moving that liquidity higher. And then all of a sudden we get up to this area around, 63.16 and that disappears. That tells me the market's going to come back down. Okay. Because it was the liquidity that was pulling the price to get it up there. Right. So that these are the type of changes that I look for. And when I can coordinate a change in the order flow at an important level in the market profile, I can recognize what's likely to come next. I also use the market internals, which is the breadth, the advancers versus decliners, and the ticks as another way to kind of get an insight of what's happening in real time. We got 4 minutes till the market opens. Hit me with your questions. Hit me right now. Good morning to Will, Trevor, Zach, Billy K. Scalping strategy in the house. Mike is here. Street salsa. We're going to the chop zone. We are in the chop zone. I mean, you can just see how much chop we did over the weekend inside of here. Okay. All day yesterday. Just up and down and up and down and up and down and up and down and up and down. So you best expect that could continue this morning. We could just keep doing it because it's been working great. They've been bringing in shorts at the lows and squeezing them. Bringing in longs at the highs and squeezing them. And as long as it keeps working, traders will keep doing it. Traders will keep doing what works until it doesn't. And then suddenly they change their mind and something new starts to happen. Oh boy in the house, good morning to you. Marketing guy, welcome, welcome. Mike says, do you care about ticks for profit risk or do you just use structure? I leaned too hard on ticks before. Yes. So I don't use any exact levels for entering trades. I change my position size to manage my risk. So sometimes I'll take a trade and I'll have a 2-point stop. Sometimes I'll take a trade and I'll have a 20-point stop. It depends on the setup. It depends on what the structure of the market is telling me. So the way I always think about my stop is, what is a level where something will change, right? So if the market, for example, were to look above 63.16 and fail and start coming back in and I wanted to get short, as long as we don't get back above that current high, the higher probability is that it's going to go down. Okay. So that's the first thing. I know the probabilities and I know that we want to stay below that high. So all I have to do is put my stop above that high. Okay. Now I cannot right now predict how far above, 63.16 the market's going to go. We may poke up there and just go 2 points above and come back in which case I can get in with a much tighter stop, or we may poke up there and get some short covering and go all the way up to 23 or 63.27 and then come back in. I still want to use that as a stop. Okay. But then it may not be tradable unless I'm targeting all the way down here because my reward must always be at least double my risk. Also, if I'm trading with a 12-point stop as opposed to a 2-point stop, my position size is going to be much smaller. If I'm only risking 2 points, I can take on more contracts. But if I have to risk 12 points, I'm going to take on fewer contracts. So you're absolutely right in your question. Structure is how I choose where to put stops. Okay? Because structure is where things change. And that's where you want to no longer be in your trade, where something is going to change. Okay? And then how do I manage my risk? how do I guarantee that I don't blow up my account? Is that no matter how big my stop is, I adjust my position size so I'm never risking more than 2% in a trade. If I'm never risking more than 2% in a trade, and I always make double, at least, what I'm risking, it means winning trades win at least 4% of my account size. Losing trades never lose more than 2% of my account size. At that ratio, I only have to be right 40% of the time, meaning more than half my trades can lose. I can get stopped out more than half the time and still be profitable and still be making money. I just have to do the math in my mind of adjusting my position size based on my risk. If I lost you, I'm sorry. Take the next workshop. I don't have one scheduled right now, but I will soon. Okay, so the market is open and we are inside that chop zone. So as I said, inside this zone, there is no real edge as far as I'm concerned. The market could go up, it could go down, it could go sideways, it could reverse anywhere. You know, you might say, oh, this looks bullish. I'm going to buy support right here, and then it drops, right? So inside this chop zone, all I'm expecting is a lot of reversals, a lot of chop, and I'm not going to try to enter trades. If you're a scalper, go to town, have fun, scalp it up. But the way I trade, this is not the opportunity, not yet. What I will watch is, as we push into resistance, what happens to the market? Does it get smacked down or can it poke through resistance? Same thing with support. And then I will constantly watch what we call the halfback. I will also be watching Bookmap for ideas of what's happening. Is it a lot of stops and icebergs? If I'm seeing lots of stops and icebergs, the stops are telling me that traders are getting squeezed. And like I said, as long as they keep getting squeezed, it'll keep chopping, right? As long as they can get somebody to squeeze out of their shorts. Look, they took out 40 shorts right there. Then they came back down. Now they just took out 58 longs, right? As long as they can keep doing that, they can keep squeezing traders on both sides. It's going to keep chopping. It's going to keep going sideways. Okay. If I see a lot of icebergs, I know it's artificially being held in place, meaning it's computers intentionally keeping us in this chop zone, which tells me to be much more cautious with my entries. That tells me it's going to be more confusing at that chop zone high or chop zone low to know what's going on because it's bots artificially doing it. And that is how I see things right now. Took out stops at the high, took out stops at the low, bots on both sides, bots coming in right now. So guess what? This is a chop zone that the computers, the high frequency computers, are using to squeeze people for just a couple of points here and there, up and down. And those computers are going to stay turned on until something changes, until we break the high or the low. So chop, chop, chop. This market's going to go. Thank you, Bookmap, for the information. For those of you guys that don't know, Bookmap is running a huge sale right now. It's one of the best sales I've ever seen. It's like 50% off if you get Global Plus and the data from them. So check this out for sure. If you're a member of the brigade, make sure that you use the email I sent out over the weekend. It has a special promo code where you can save an additional 10% on top of this. So check that out if you're a member of the brigade. If you're not, you know, anyone who uses Bookmap, if you've been thinking about giving it a try, this is a great opportunity to sign up and give it a try for a couple months and see if it can give you an edge in your trading. Okay, so now we are pushing down into support. That support is going to be right here around 62.96. I will look for a bounce there. If we get it, I'll be saying what happens to the halfback. And I'm just trying to come to an understanding of what the market is doing. Who's in charge? Are there more buyers or sellers? What happens at support is the first clue. What happens at the halfback is the second. DNK. Okay. So he's talking about the channel from last month. Yes. So you're saying that was the change in the market? Yes, you are right. So what he's talking about is we had this channel that we were stuck in. We looked below it. And if you guys will remember, I'm not trying to toot my own horn or anything, but I was live on this day and we opened above. It may have even been a Monday. It may have even been on a Bookmap stream. Somebody look up June 23rd. Was that a Monday? We may have even been on the Bookmap stream when I did that. And I said at that point, I know it sounds crazy, but this likely means we're heading all the way up to the high of the channel, which was new all-time highs. And at that moment, everybody thought I was nuts. Everybody was like, what are you talking about? That the market, that we're going to new all-time highs. Because at that moment, the market had been selling off, and we were opening all the way down here. But you are absolutely right. That was the change that forced institutional money to chase price. So institutional was still uncertain there. And as soon as they saw that look below and fail, not literally, but you know what I mean. At that moment, they were like, fuck, it's going to all-time highs. We have to get long. And that's why we got such a fast move to get to those all-time highs. Because everyone thought the market was going much lower. Everybody was looking at this old gap and thinking that that gap needed to fill. And the market was like, nope, just kidding. And it, whoosh, then you squeeze everyone. So I was not at all surprised that we went from that look below and fail to the upper end of the channel. What I was surprised by was that we then turned that resistance into support. I expected us to poke above, but I thought we'd come back down again, and we did not. So this moment was more of a surprise to me, which is why I'm saying I'll be watching that like a hawk on the next test. Fool me once, shame on you. Fool me twice. Well, you just don't get fooled again. Okay, so we found support down there around 27. So now we're watching the halfback. Does this become resistance? If it does, it means we need another poke at the lows. If not, more chop, more sideways, more grind. Okay, so no resistance at the halfback. That means more chop. Market making sweet, sweet love to the VWAP and then reversing. More chop, more sideways, more grind. Oh boy says the market internals look bearish on the SPX, or the SPX has a gap fill to 62.27. So I'm not going to talk about SPX because sometimes we get confused about different levels and stuff like that. Regardless, take my word for it. SPX, SPY, ES, any of them. If they are going to go lower and they're going to fill the gap left behind on Thursday of last week, they're first going to get resistance. Well, the ES will first get resistance around 93. So you don't need to guess right now that we're going to head down and fill that gap. Okay? You can wait until the market says, yep, we're going to go fill that gap. That's when you get short. Yes, you might, miss out on 8 points or whatever of potential profit, but wouldn't you rather have a very, very high probability of locking in, 17 points of profit rather than completely guessing to lock in, 25 points of profit, right? This is the difference between gamblers and traders. Traders will always choose the higher probability of success over the larger reward when it's a guess and a gamble and you're uncertain. So that's the way I think about markets. Right now, I truly believe it is 50-50. This market could head lower to fill the gap, or it could head higher to make new all-time highs. Either scenario is possible. They're equally possible, and it is only with the new information, with a change. Does this make sense? So we're looking at the overnight range. What did it do? It just went sideways inside of here. So far this morning, what is the market doing? It is just going sideways inside of here. So just assume that's all it's going to do until the market tells you otherwise. Until the actual chart tells you something has changed, you should not predict a change is coming, because you might be right today and you make those extra 8 points of profit. But if you're guessing, you won't be right tomorrow and the next day and the next day. Whereas if you learn to recognize the areas where changes in the market take place, you learn to know what those changes look like, you will be right way more than you're wrong forever, for the rest of your life. So that's the key to trading. And yes, it might mean you have to do nothing for 2 hours while the market just drops around, but who cares? Better to do nothing, and then when you do take a trade, it has a high probability of success rather than you're gambling and you're hoping and you're wishing and, oh God, I really hope it sells off today. Well, what if we go make new all-time highs? What are you going to do then, buddy? I'm, of course, not talking to you. I'm talking to the general public. Because it is something that it took me so long to make this concept click. Like, I understood it intellectually, but to force myself to respect this idea that I should only take changes at a moment where I have a very high conviction that I am right. And even then, only if it has good risk to reward. Like, getting to the point where I embedded that so deeply in my brain that I will not enter a trade until that criteria is met. That's the key to success. And so I'm really trying to help you guys to understand that. So if I was looking at the SPX right now, I'd be asking myself, where's the chop zone? Where is there a change in the market that would get me to fill a gap? I'm talking about a chop zone, baby. The chopping, the squeezing, scalpers on both sides. Okay, so since they added this liquidity right here at, we'll call it 63.08, since they added that, the market has been getting kind of pulled upward. Okay, so as long as that remains, my assumption is the market wants to poke up and test 63.07. If it disappears, guess what's going to happen? Market's going to come right back down. Inside the chop zone where, baby, it's chopping, squeezing traders on both sides. Mike says tape on MNQ is flying. Let's take a quick look at the NQ. See what it's going to do. Ooh, okay. NQ, slightly different position than the ES here. Yeah, I would say this resistance right now would be bearish to see. So if they turn 22,930 into resistance here, it means that they're heading down towards 22,887. And then monitoring for continuation lower to the gap fill at 22,853. If not, if it does not hold as resistance and the market pokes back up through the opening price, then you're heading up to test resistance around 22,987. I would call the chop zone on the Q that right there. So you already got to look below and fail. Okay. But now if they can turn this into resistance, they can take another poke at that chop zone low. Remember, we still have this liquidity above. The market still wants to come up and test this as we're working our way back down into support. And we know the market is chopping. So we are looking for support and a reversal right back up. People hanging out in the Discord, sorry I've been ignoring you. My bad. Justin, good morning to you. Trader, good morning to you as well. Trader's Life, welcome, welcome. He asked for a link to the website. Thank you, Trader, for giving it to him. Justin in the house. Justin says June 23rd is a Monday. So it was on the Bookmap stream. So you guys could go look that one up. It's on their YouTube channel, and you'll hear me talking about it pre-market. Before the market even opens, you'll hear me say that as long as we stay above the previous day's low, we're heading up to new all-time highs. I'm talking about a chop zone, baby. They'll chop it. They'll squeeze the traders on both sides. Marketing Guy says some of the mind teachings from your Markets and Mind course are the most valuable. Dude, you're speaking my language. Anybody that's seen the meme of, the guy's like pushing a rock up a hill, and then he thinks he's like right at the top of the hill, and then he finds out that that's just one little ledge on a much bigger hill. Like he thinks he's at the top of the mountain, and then he realizes, oh no, there's just more mountain, and he keeps going. Like TA and reading charts is literally just the first little hill to climb over. The real journey is when you start getting into diagnosing your own brain, your own habits, your own strengths and weaknesses, and you start to analyze why you make decisions the way you do. That's when you start crushing it as a trader. And that is way harder to do than to learn to read charts. Learning TA is not that tough. Anyone who's willing to, put in the screen time and sit and watch a chart move every day will learn to read TA. But learning to understand your own psychology and why you make the decisions you do and how to make adjustments, that's the real game of being a trader. It's in your head, man. It's not in the charts. And that's hard to explain to people, but I do my best. Frank says, to trade well, do you also have to learn to sing? I don't know. I've never learned, as you can tell. Man, if making up random lyrics in real time made you a good trader, I'd be a friggin' billionaire. That's funny. Okay, so as we're poking up towards this level we've been watching on Bookmap here at 63.08, that liquidity is still there. So that's very interesting. It has a good chance of getting filled here. Nope, they disappeared it. Look at that. They disappeared it 1 second before price got there, which made them stop out 398 shorts. Just got squeezed. So now they took out those shorts. Guess what they're going to do? Head back down to take out the longs. Squeeze them to the upside, squeeze them to the downside, and chop it up. Chop, chop, chop it up. Woo. Okay, so this is something we don't talk about a lot, but the tick chart here has just made it back to the zero line. So this is basically where, when we're talking about the underlying stocks that are in the NYSE, okay, it is now about 50-50. There's about the same number of stocks going up as going down. The same number of upticks as downticks at this point. So everything is even Steven. From here, one side or the other can start to build momentum. So what am I watching? The halfback at 63.04. Can that become support? If the halfback becomes support, it increases the odds the market is going to take a poke for the chop zone high. If at the same time the ticks start to get above the zero, that is a sign that the buyers are trying to take control of the market. Remember, they don't have control until they get above the chop zone high and get new buying there. But as a first sign, that's what I'm watching. Can they hold the halfback? Trade hard. We will chop it. We will chop it. Come on. I won't even try. I'm not even going to try to do Queen because My voice will literally hurt your ears if I try to go that high. Muhan says, can you please explain the green dot showing 398? So the green dot is the opening price. That's where the market was right at 9:30 a.m. And then you can't really see it right now because we only have one TPO, but the green like circle around the letter, that is the current price. And at the end of the day, that is the closing price. So why do I want that level marked on my chart? Because knowing where the market opened and where it closed is very important information. One, it shows me the momentum. It shows me that on this particular day, the market started all the way down here and ended up here. It had momentum up. So even if we open the next day and we're lower than we were at the close the previous day, we still have momentum. So I don't want to get bearish just because we went down a little bit in the overnight, right? I want to keep that in mind and understand that we have momentum at the end of the day on Thursday. We're still inside Thursday's range. Of course, that momentum changes if we make a new low, but we haven't made a new low. So right now, this is actually bullish and the market is likely to go higher. And so context of knowing what happened yesterday in terms of where we opened and where we closed. And then also when we retest those levels, a lot of times that's where a massive change to the market will happen. So not right now because we're, in a chop zone. And so we're going to cross through the opening price a million times. But a lot of times if the market were to open, push above the opening price, find support and start to work its way higher, you'd want to stay above that opening price. Because let's say the market worked its way up to 63.30 or whatever, right? And then it came back down a couple hours later. As long as it's above that opening price, it doesn't need a bigger pullback. It can find support and keep going. But if it crosses through that opening price after having gone all the way up there, guess what happens? Where are all these people putting their stops? They're below that opening price. So if it works its way all the way up and then comes down and crosses through that opening price, you get a liquidation. Now, maybe you want to short. Maybe you want to put a stop sell order one tick below that opening price so you catch a short on the way down. Or maybe you just want to be aware of it so that if it starts to liquidate, you can buy the dip. Because liquidations, you want to buy the dip because they often reverse. So you want to know where was that opening price. All day long, you want to be aware of where that opening price was because that is a level where something could change. And that's what we do as day traders. We try to figure out where can something change, and then we watch what happens when the market gets there. Oh, chop it to the left and chop it to the right. Chop it to the squeeze, all the sides. Almighty says, do you trade gold? I own some gold in my long-term portfolio purely as a hedge to stocks, but I don't trade it. To me, gold moves too slowly intraday, and it just is too range bound. If you just look at a daily chart of gold, I mean, it gets range bound for insanely long times. You know what I mean? It gets range bound for 3-4 months at a time. And so that's a lot of guessing. Where is it going to reverse? When is it going to reverse? Yes, there's great opportunities at the lower or upper ends of that range, but you'd have to be a swing trader, right? Not a day trader to operate in those ranges. So yeah, gold doesn't interest me as a day trader. I'd much rather day trade like Tesla. You know what I mean? I'd much rather day trade something that has more volatility intraday on a particular day and gives you more opportunities, more edge. Looking at gold right now, though, if they can hold basically today's low, up it will go. So we were talking about this last week. We had a trader in the brigade that was saying that he saw this support and went long up here around 33.50. And I was saying if you wanted to get long around 33.50, you'd have to have your stop below that trend line because, it could come back to that trend line. And if it finds support, it's just going to keep going up. So that trend line was tested today. It was a look below and fail, I imagine, in the overnight. So yeah, if they can turn around and go up from here, they can create the momentum to get to, 34.50. If they continue back down below today's current low, it could lead to a sell-off. So this is a great place for gold to decide what comes next. Okay, so we're watching the halfback. Do we get a bounce? No. All right, folks. Well, I got some bad news for you. Looks like the chop zone is going to continue. So let's just look at the Bookmap chart. Since market open, what is happening? Right here. The market goes straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down, chop, 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 down, chop, 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 up, chop, 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 down, up, down, up, down. This is chop. Okay? We can see it on the chart. What do we have at the highs and the lows? Stops being taken out. What do we have in between at all the reversal levels? Icebergs reversing the market again and again. That's the market telling you it's a chop zone. What do we see when we look at the market profile? Come on. We see that in the same areas where the market ran out of steam to the upside and the downside in the overnight is where we're running out of steam now. So that tells us this market wants to just chop. It wants to stay in this range. It wants to go down to get people short and then reverse back up to stop them out. It wants to go up to get people long and then reverse back down to stop them out. So as of now, I still see this as chop. Even at this very moment, this rapid fall is liquidation. What does liquidation often do? Find support and come right back up to where it started. So since this liquidation started around 63.05, the market is now looking for support and a move back up to 63.05. If they get below 62.93, that is when everything changes. But it looks like you're going to have to be a member of the Pirate Traders Brigade to see what I think when we get there. So if you are not a member of the brigade, you might consider joining. It's $20 a month. You can join by going to piratetraders.io/join. You can see it at the top of the screen. You go there, you sign up, you pay your $20, and then every day, every trading day, you get an email from me in the morning before the market opens, giving you my insights on the day, and you get to hang out with me and live stream like this for the first hour every single day. So you always get my insights going into the morning of what are these important levels and what do we want to see when we get there. It's $20, y'all. That's less than 2 ticks on the ES. Okay? So if you don't think after an entire month of hearing my insights that you could save yourself 2 ticks of loss or make yourself 2 ticks of profit, then I don't want you in the brigade anyway. Okay? This membership absolutely pays for itself tenfold. In a week, it will pay for itself. So I highly encourage you all to check it out. We'd love to have you. We love having new people because you guys ask great questions that get the rest of us who are kind of old school and been doing this for a long time thinking and talking and having some fun. So if you are not a member of the brigade, I highly recommend that you join. If you're not a member of the brigade, I'll see you here next Monday morning. A big thank you to Bookmap, and to all of you, goodbye. Au revoir. I love you. And if you're a member of the brigade, let's set sail.